Hi guys, welcome back to Father and Son Investing. We're going to revisit a stock that I talked about earlier this year. Senseonics is the company, SENS is the ticker symbol. A lot of people are eagerly awaiting some news on Senseonics. If you are a stockholder, you know exactly what I'm talking about. In this video, we're going to cover 5 things. We'll talk about what that urgently awaited news is and what the status might be. We'll talk about the adoption of the SENS 180 device in Europe and how that is going. We're going to talk about the number of 90-day users within the United States and the number of providers within the United States who are trained to do that insertion and why that might be a problem. We're going to talk about insider selling. I know a lot of people have been discussing that. We'll talk about what's going on with insider selling and why there might be some insider selling, and educate us about how insider selling takes place. And then number 5, I want to talk about the revenue growth outlook for Senseonics. I am an investor as well. We need to be able to keep our expectations in check. I know a lot of people are thinking FDA approval, what will that do? Let's just look at what the revenue growth outlook is for Senseonics. Item number 1, when is the big news going to happen that we're all waiting for? When is the FDA approval for the 180-day device coming through? Well, a lot of people got excited when they heard this during the third quarter presentation.
On the innovation front, we're excited to be approaching our major release of our next generation product in the U.S. with the FDA clearance of our 180-day sensor, which we believe remains on track to occur later this quarter.
After Tim Goodnow and the CEO made that remark, he went on to discuss their conversations back and forth with the FDA and followed up that remark with this.
If there are no other unexpected additional impacts as a result of COVID delays or any other factor at the agency, we continue to expect approval by the end of this year.
Now, I know we're all excited by that remark. The end of the year, of course, the end of the year is rapidly approaching. But keep in mind that the FDA does not necessarily work on the timelines of the presidents or CEOs of companies. Also important to know here is when a new pre-market approval would be required. The FDA says that if the design change causes a different intended use, mode of operation, or technological basis of operation, or if there will be a change in the patient population that will be treated, or, and I think this is a key point in this situation, the design change is so significant that a new generation of the device will be developed. So this is really just a modification to their prior device. Otherwise, they would have had to do a new pre-market approval. So what I get out of this is that this device has not changed so much that a new generation of the device will be developed. And therefore, I think that this is going to get its FDA approval. The question still is when. Secondly, I want to talk about the acceptance of this CGM, a continuous glucose monitor, within Europe. Of course, this device already has the CE approval, meaning that it can be marketed within Europe. So just how well is this going? You know, when I looked at this company back in February, I was concerned about the acceptance that was taking place in Europe. They didn't seem to be actually generating a whole ton of revenue from there, and we'll go back and look at some of that. But I am encouraged by what I see in this third quarter transcript from Tim Goodnow. He did say here, we encouraged that in Italy there were certain regions where it has strong tenders, which are creating meaningful market penetration, and overall, patient share in those regions is currently already above 5%, which we believe speaks to the potential of SENS. Let's just take a look at how this adoption rate is going within Europe for this continuous glucose monitor. We go back to September 30, 2020, the 9 months ending then, and we see that the percent of revenue was 30.5% outside the United States. That amounted to $325,000. Not very much. Now we look at September 30, 2021. What do we see? 80.4% of the revenue is now coming from outside the United States, and this has just grown incredibly, over $7 million of revenue. I think we can tell from this that those Essentia folks are doing a pretty good job outside the United States. What we also glean out of this, though, is that the revenue for inside the United States more than doubled. I think that's good, especially considering that the 180-day device has not been approved yet. Okay, we're going to get to item number 3, and that is the number of 90-day device users within the United States and the number of providers who are trained to insert this device. I had some concern as I went through the question and answer session that followed the presentation of the third quarter results. A question was posed whether they could give a sense of where they were in the United States in terms of the number of users from a physician's standpoint. The results shocked me a little bit. Tim Goodnow said, "We're going to stick to the annual patient count. As you recall, we were just about 1,000 patients a little bit more than a year ago. We have seen some reduction from that." What does that tell me? That means that they have less than 1,000 patients in the United States using this device. That shocked me. Now, one of the reasons I think for such a small number of patients using this device could be the number of healthcare providers that they've managed to get trained. A follow-up question from the Q&A said, "Is there any way you can kind of give us an idea of how many folks are implanting the device today?" The response again was a little bit surprising. It says, "I believe the numbers are a little bit over 400 folks. 400 healthcare providers that are trained and are actively inserting this device." I think that explains why there are 1,000 or less than 1,000 within the United States who are using this CGM. So one of the things Senseonics will need to do, or Essentia will need to do, is to get more providers trained on using this device and educating them on the benefits of using this device for their patients. However, another thing that Senseonics is doing is trying direct-to-consumer marketing. That certainly can be very effective in getting patients to adopt use of this device. If they hear about it or read about it, then they may be more likely to ask their provider about it. All right, I want to switch gears and get to the fourth item of conversation, and that is insider selling. Of course, recently, back in November, there was some insider selling. Anytime a person who owns more than 10% of the company has to file a Form 4 that indicates that they are buying or selling shares. We're going to look at this Form 4 that was filed for Mukul Jain, who is the COO of the company, and glean what we can out of this so that we can better understand insider selling. We won't look at the top part of the form here. We're going to jump down to box number 3 with these transaction codes. And for the 16th of November, we'll see that there was an S. The S stands for sell. And then there is a little number right there. It says number 3, and it indicates some more information about why the person is selling. If we jump down to the explanation of responses, we'll see that number 3 says, shares were sold pursuant to Rule 10b-5-1 trading plan. All right, what in the world does that mean? The answer to that comes from Investopedia here, and I think it's critical to understand this because sometimes we just think that when insiders are selling, they must think that the business is not great or they would be holding onto their shares waiting for the stock price to go up before they sold. It says here, Rule 10b-5-1 permits major holders to sell a predetermined number of shares at a predetermined time. Many corporate executives use 10b-5-1 plans to avoid accusations of insider trading. Of course, insider trading can land you in jail or with a huge fine, and so these executives set up a predetermined plan. Hey, at this point in time, I'm going to sell some shares. It may be when the shares are at a low price. It may be when the shares are at a high price. Doesn't matter. At this predetermined time, I'm going to sell some shares. This article further goes on to state Rule 10b-5-1 stops any insiders from changing or adopting a plan if they are in possession of material non-public information. What is material non-public information? It is information or data that is relating to a company that has not been made public but could have an impact on its share price. There are some further rules in here that offer some protections to both shareholders and the insider of the company. And one of the important ones I see here says the plan must give the broker the exclusive right to determine when to make sales or purchases, as long as the broker does so without any insider information there when the trades are being made. All right, so what do I get out of all of this insider trading? I'm less concerned about it. It's being done in accordance with this rule here, and that offers protection to both us and the insider. Lastly, I just want to talk about expected revenue growth for this company. Of course, their revenue right now is quite small, 12 to 15 million. One encouraging thing out of the third quarter presentation is that Tim Goodnow, the CEO, said that they are not going to change their expected revenue. They still are expecting this $12 to $15 million range. When they initially made this, they were expecting that the 180-day device would be marketed within the United States by now. Now, let's just look at the expected revenue for 2022. Of course, this estimate was made back in 2020 and was based on FDA approval of their 180-day device, but they were looking at only 30 to 40 million. Now, granted, that is more than double what their 2021 estimate was, but still we're talking pretty small numbers here when it's compared to their competitors. It's not until about 2024 and 2025 that we're really going to start to see some big increases in their revenue. We're looking at about 100 to 120 million in 2024, and that of course depends on FDA approval and CE approval of their 360-day device that they're working on. So I just want to make sure that investors are keeping their revenue expectations in line with the company. Certainly the price of the stock should move in line with those revenue estimates. So what do I think is going to happen when this FDA approval comes through? Again, I think the stock price is going to double. It may even more than double initially. But then I think that business takes over and we see that the company isn't generating tons of revenue, and therefore their stock price will reflect that. All right, that's what I have for you guys today on Senseonics. I am still a shareholder. In fact, I bought a little bit more today because I am waiting for this FDA approval, just like all of you. If this was useful information for you, please give us a thumbs up, and we would love to have you as a subscriber. Share this information with a young person in your life. Man, this is a very inexpensive stock at the moment, and it could certainly be exciting for a young person when they see this double or triple or quadruple. Until next time, enjoy your investing.